three speakers on stage. Have we got one on their way? Because the traffic has been problematic. Is there one more joining you? We need the mic. Okay, you got a mic there? Excellent.
Yeah, actually, Alex's flight, if I'm not wrong, got delayed.
Oh,
so
his
it's going
flight
to be
got
the three
delayed.
of us.
You know, we've been having a lot of that. Folks have been flying in. The flights have been delayed. Barcelona airport is a challenging place today. So with apologies for Alex, we're going to hand it off to our power trio. Give them a big round of applause. One more time. Yes, fantastic. Thank you.
Well, hi, everyone. Hope you're enjoying the session. So thank you so much for having us here. Maybe we could start by introducing ourselves. It's Ivan, founding partner at Enzo Ventures. We are an emerging fund based in South European regions. We are investing since the last 1 year and a half. And I'm so happy to be here today, really looking forward to have the chat about how we as a VCs see the Web3 industry. I will speak from a generalist point of view. And really looking forward to get your insights. So maybe we can start with you, Anton.
The startup.
Check. Nice. Hi everyone. Happy to join the panel. My name is Anton. I'm partner and head of venture capital at Hodl Group. Essentially, we are multi-stage investment group running several strategies from open-ended liquid funds to venture capital and algo fund.
Good afternoon, guys. This is Vineet from Cypher Capital. We are a $100 million single LP fund based in Dubai, over 300 plus investments. The parent is the world's biggest miner as well. Something from the last session, we are a $5 million check in Sui blockchain. The answer wasn't correct, though, from the panel. People invested in Sui and Aptos because the founding team comes from Facebook blockchain. That code exists. They raised $400 million in a bear market. And if you look at how layer 1 and layer 2 valuations went in 2021, you're expecting a 3 trillion market cap to end 3 billion market cap to go anywhere from 90 to 100 billion. So there's a huge upside for VCs as well as people who landed on a Binance launchpad. So just a few points because we invested in Sui.
So thank you so much. So maybe we could start the session by defining what is Web3 and how it does differ from Web2 projects, right? So
I didn't get you, sorry.
Anton.
I can elaborate on that from the deal perspective. If you take traditional venture capital or private equity, the primary form of the deal has always been equity. When you take VC within crypto, I think something that's very specific is, of course, token structures. That brings, first of all, better liquidity horizon. If you take traditional venture capital fund, the average fund life is, I think, 5-7 years before actually harvesting and distribution to LPs. And if you take a VC fund within crypto, like Hodl Ventures, it's basically much faster liquidity distribution than equity is.
So just adding to the point, normally when you look at a in a Web2 stage, someone comes up with an idea, goes to mom, dad, takes money, goes to an angel investor, takes money, does $100 revenue, does a Series A, $1,000 Series B, and 8 years later, lists himself in an exchange. Anyone who comes in the way has an 8-year lockup. Web2 funds normally are of a 10 plus 3-year horizon. When we look at Web3, someone comes up with an idea and 6 months later, they are doing an ICO. It has happened. Of course, there are companies which have done longer periods. So, the key difference here is in Web2, there is a lot of adoption that comes in. People actually have booked an Uber or ordered a pizza on one of those sites and then end up buying an IPO. While in Web3, it's more about, people just come to know about a product. There are no users around and people are investing based on the future potential of these things. There's more liquidity. Again, Web3 funds have a 5-year horizon, so they will have to deploy money in 2 years and get a cash out for their LPs as well. So difference is basically on the adoption, difference is basically on the time horizon. And it's a growing industry, it's a growing asset class. It's not like Web2, which has been there for years.
That's very interesting, thank you. And what do you guys consider that are the key trends that are attracting generalist VC money?
key trends in terms of the segments.
Exactly. Segments, applications, any use case that is mainly attracting VC money from a journalistic point of view.
Yeah. So, my view on the whole investment space in Web3 is 2017, anyone who had an idea to plant a tree in Africa went and did an ICO and raised $100 million. 2021 was all about products that had use cases. You had Aave, you had Compound, where people could lend and borrow. So use cases came in. I think the next season is all about adoption. How do we get 400 million people to become a billion or 2 billion people who use Web3? So it's all about the dApps that come in. A lot of people said, there was a lot of investing in layer ones, layer twos, or the infrastructure play in bear market. The reason was when these companies were ending up raising 20 million, 50 million, or $400 million, you knew that they can run the bear market. But as the bull market starts coming, people go towards things that will get adoption, because in the end, you can have millions of highways, but until the cars don't run on them, it's not going to go anywhere. So the dApps would come into play, whether it is DeFi dApps, whether it's gaming, things that can get number of users. So for us, we did the bear market investing in layer ones, layer twos infrastructure, but next season is all, future investing is all about dApps that get users on board.
What's your point, Anton?
On the side of Hodl Group, we are a big proponent of thematic investment. When you look back at crypto, you basically see a clear capital rotation across different sectors. In 2020, we had DeFi hype. In 2021, we had GameFi, and as Vineet said, Layer 1, and then it was Metaverse. So there is always a big narrative that's being played. I agree that I think DeFi offers something very cool, far more on the fundamental side. I think that's the only sector within crypto that actually has real businesses, with recurring revenue model, that you can make some, traditional valuation models from Cherify and calculate fair valuation. At the same time, verticals like gaming, for example, we believe it has, huge user base that has digitalization and crypto in their DNA. So that's super easy to transition these people from gaming, from Web2 space to Web3 space.
From our point of view, we decided to launch a pre-seed fund because we really saw a lack of capital in very early stages, at least in Web2 market, right? Do you think it's exactly the same case for Web3? Do you think that there's a space for middle and, let's say, later stage projects, but there's not enough capital for very early stage?
Again, we're talking from the last 2 years of bear market, and you saw not a lot of people investing. But again, there are investors who are investing. If you look at Saudi, they came up with, Neom has launched up a fund. There was Savvy Games. There are pockets where money is coming in. I know one of the exchanges that we are backing just got $500 million from Mubadala. So there is money there. But again, the problem is with how people think. In the bull market, everyone is a Warren Buffett. You go outside and the kid having $50 in his pocket knows how to invest. But in a bear market, people just go hiding into their shell, and that's the time that they should be investing. For us as a fund, we have done 3 to 5 investments every month. We have never stopped. I deployed $60 million last year, close to $10 million in this year as well. Out of Token 2049, we had 18 investments that we did. So yes, real long-term VCs are still deploying, but the kids who were building up small VCs in bull market have all vanished. So there is capital. It's just that finding the right people who would invest.
The number one variable of a VC fund performance, if you look back at the history, has always been the vintage year, or the year where the capital has been raised for this fund, and the deployment time. So on the balance of probabilities, with some positive catalysts coming, like the ETFs for Bitcoin, and also on the crypto level, the halving in 2024, we believe that on the balance of probabilities, it's actually the time to be invested. So smart money has been, at least on the private market sides and VC side, has been actually deploying quite actively. And we did the same.
So in our case, we've been deploying at like almost one company per month during the last 1 year and a half. And we've seen a lot of difference in valuations. So we speak about valuations. What's your experience? Like during the last 2 years, and what's the current status on that sense?
So again, I have also built startups for 15 years. Whenever markets are down, whenever there's no capital, survivability comes into effect. So there were companies which raised at $100 million valuations in the bull market are now actually doing down rounds. So yes, valuations have come down. But again, that's how you survive. Today when you look at, I remember at one of the stages in the US, Gala clearly said that, whoever needs money, we have $400 million to invest in startups. Today, Gala in itself is $400 million worth. So where's that 400? So point is, valuations have come down. New companies also have to look that, when they are looking at the $1.5 billion, like, for example, Sui was at $3 billion. Bera Chain is at $1.5 billion. So they also have to look at comparables. What are the other comparables which are listed? Why shouldn't someone go and buy a token that is listed on the same segment which is at a lower valuation and buy something which is completely uncertain? So valuations have come down. It's the best time to actually be investing. But the problem is people always run on fear and greed. Right now, fear is with everyone. When BTC was at 16,000, everyone was waiting for 5,000. Now it's at 35,000 and everyone's buying.
Anton?
Yeah, I think the answer actually depends on the time frame. If we look back at, for example, 2018, even protocols like on the infrastructure layer, like L1s, were actually raising at 20, 30 million valuation at the seed stage. For example, Solana, I was talking to the other day, to the guys from Cosmos Foundation. They were offered Solana seed, I think at 15 million valuation, which was very small at the time. If you look at actually at the current deal flow within VC space, I think it's very problematic and difficult to find good bargains from the perspective of valuations, because valuations got much higher in comparison to the previous cycle. So yeah.
One of the most challenging parts of being an emerging fund manager is about structuring follow-ons, right? So once you have your portfolio construct, how do you decide who to support? How do you decide how to keep supporting? And I'm just curious about your follow-on strategy, right? So maybe we can start with Vineet.
So again, follow-on for investments happen once you see the founder doing something. A lot of people raised in the bull market and then did nothing. They are trying to pass their time in the bear market. One of the startups that I invested in one of the rounds, today they have signed up with ICC, which is the cricket governing body of cricket. And today they are on the World Cup. They're actually having 50,000 downloads on the app. Now, when you see founders doing stuff like that, when you see founders going to good events and talking about their product, you know that they're going to do something great later on. So for me, the follow-on strategy is all about what are they doing. All the Twitter hype and all the influencer hype is off. What is the product they are building? Is one of the games that I invested out of Paris, known as Cross the Ages. It has been top of the charts across multiple countries. You see them actually working. You see them going to events. You see them having gamer displays. So when you see that, you're happy to invest because this is not, anything can fail, but that this has the least chance of failing. So we like doing those follow-ons, and we support them not just through money, but through connections, through relationships, through business development, anything that they need.
Just to add on, how much are you keeping reserve for follow-ons out of your total size?
So luckily for me, I'm a single LP fund. That means the same guy gave me $100 million. So I don't have strict rules on to do this and do that. I invest based on what I see. For us, ticket sizes have been from $250,000 to $500,000 and have been 5 million as well in SOE. So we are very fluidic in terms of nature. I see someone working, and if he needs money, why don't we invest? So we are not very strict on such rules.
Okay.
Yeah, I believe that on the side of portfolio management, follow-ups are essential because venture capital is a game of exceptional outliers where a small percentage of protocols succeed and most of protocols actually fail. And this small fraction pays for all the losses. So you want to actually ensure to size your position in the winning deals. For us at Hodl, there is no clear ratio how do we split between follow-up and initial investment, but we also always structure essentially either an option to invest along the way at a predetermined valuation and, for example, double down on the deal, or we also have open-ended liquid pocket within the VC fund, which allows us actually to size our position on the secondary market, just buy it from the market basically.
Okay, makes sense. Makes sense. How do you see Web3 industry basically in the future? I'm talking about how capital will be distributed, right? There's a lot of accelerators, incubator programs. If we stick on the early stage market, do you believe that actually verticalize or industrialize, let's say, VCs makes more and more sense? Or do you think that there's also space for generalistic VCs? Maybe we could start with.
So before going to that answer, I think Web3 is still very nascent. I compare it with the 1980s stock market of India, where people didn't understand that a share represents the future potential of a company's earnings. Similarly, in crypto, no one understands. People really don't understand even the difference between layer 1, layer 2, or even a layer 0. So I think it's too early to make these decisions whether there will be verticalized or whether there will be a single entity like SoftBank that will control the market in 2030, because that's what we plan to become by 2030. We're still evolving. People have no clue what crypto is all about, what blockchain is all about. There are no users. So when I was sitting with someone from PIF and she said that, we have a long-term view of crypto. And I asked her, have you ever booked a Uber on Web3? Have you ever ordered a pizza on Web3? She said no. So there are no customers here at the moment. 400 million wallets in the market. 90% of these people wake up in the morning to see the BTC price. They have never lent on crypto. They have never borrowed on crypto. They have never done KYC on crypto. They have never used it. So I think this question is very early right now. The industry is evolving. And right now there are generic VCs who are backing. For us, we are backing things which are having great founders, great investors, and there is a definite product use case. So we're not very specific and segment focused.
What about you, Anton?
Yeah, I think one of the recent trends that we actually see is a blurring of lines between private and secondary markets. So we see many, crypto native VCs that actually are either pivoting or, introducing secondary market deals, and at the same time we see liquid funds still making, VC investments. So I think the future is like a blend mix of private and secondary markets. We also see, a great growth in user capital platforms and launch pads that actually not only bring capital but also introduce community, to the formula. So I think the future is bright, and I think there will not be, limit to capital in the next 5 years in a way.
That makes sense. Let's talk about founders, right? Let's talk about due diligence process and how do you guys structure this process internally. So any specific topic you would like to highlight on that part, in the sense that what really requires a founders to be having in order, for you guys to be investing in their ventures. Maybe Anton, we can start with you again.
Yeah, I think when we look at the teams, we try to see whether the founders actually internalize the problem that they are solving, like on a deep level, because I think that's like differentiates the ones that will actually stick during the bear market and build through it, and the ones that actually are just after money and will will go after just mercenary incentives.
So for me, I've been a startup founder for 15 years. I did 3 startups. My last one failed thanks to COVID. So again, I look at, other than the great idea that everyone has, I come up with 10 ideas. When we meet a founder, we look at how persistent this guy is he ready to battle it out? In fact, I was seeing a video in the morning where, this founder said that, it's not that easy to build a startup. A founder has to be 24/7 working. There are no Saturdays and Sundays. The founder has to have a vision. The founder has to have the charm of getting people to work for him and getting capital. So for me, it's all about these founders. And I don't invest in single founders. I invest in teams where you have 2, 3 founders. You don't want a single founder who goes off in a car crash and then you are left with bags of nothing. So I think it's all about the founder who really has the persistence to build a great billion-dollar company and has the vision on how to go around there. So that's how I would say.
I got it. That's clear. I'm sure there will be Web3 founders on the audience, so I'll take the chance to, let you ask any question you may have. You have the chance ask directly to VC now. So, is there any question?
Before we get a question, can I have a raise of hands? How many of you have Bitcoin and or Ethereum or in any crypto? How many of you have lent or borrowed on Aave or Compound? See, the number of users dropped down. How many of you have actually transacted anything other than this on crypto? A KYC, a WorldCoin? See the number of users drop. So we are so early in crypto. People think that, we didn't enter when Bitcoin was $10 and it's 30. It's not even started, guys. There's no consumers in Web3. 2030 will be when your kids will come to you and say, you saw the whole industry and didn't do about it. So get on the transaction side of it.
Okay, sound advice there. Do we have any questions from the audience for these three experts? Such an interesting topic. As you can tell, the room is absolutely packed. But do we have any questions? Anything they haven't answered yet? Yes, a question over there. Good man. Okay, waving away. I got you eventually. Thank you. If you could, sorry, Victoria, if you could introduce yourself to the room. Thank you.
Hi, my name is Roy Villanueva. I'm a founder myself. I'm building an AI platform for investing in crypto assets based on fundamental analysis. So my question is, how early are you willing to back a founder?
Who's going to jump in there? That's a leading question. Very good.
Yeah, for us at Hodl Ventures, our sweet spot is basically pre-seed and seed stage. So we don't do incubation or acceleration. We always prefer some sort of MVP available so we can test it and gauge whether there is pre-product market fit. So I guess the answer is pre-seed, seed is perfect for us.
So 90% of Cypher's deals are follow-on investments, as not a lead investor, but a co-investor. So I have deals which happened with A16Z, with Pantera. I'm a co-investor. But this is 90%. There are 10% of startups which have come randomly and actually shown a product and a vision and an implementation strategy. And we have invested small checks into it. But as predominantly as Cypher Capital, our checks always go as co-investors in something that has a lead investor and has a workable product.
From our side, we have invested in founders that were actually at their previous jobs, even before starting the product itself. So we try to discover founders in a very early stages. We like to co-invest with business angels, and we like to be the first institutional VC on board. So that's our case.
Fabulous question. Great answers. Thank you very much. Oh, yeah, sorry, I beg your pardon. So we got one question here, and then I will come to you. I'm sorry, I walked past. So, Javier, please introduce yourself to the room.
Hi, nice to meet you guys. My name is Javier Celorrio. I'm one of the co-founders of Lead Lab Games, and I've been traveling through Asia in Token 2049, Japan, and all these, meeting these VCs around. And what I felt is that what you guys are looking right now is more into the team or the backers that a team has, a platform, rather than the product. Because, for example, we have one of the best performing video games at the moment in the Web3 space, but we felt that VCs are a bit pushed away at the moment. They're just following trends and following big names. How do you feel about this? Are you just, at the moment, focused on the MVP, what you were mentioning at the moment, Anton, or more into how back is this project and how back is those projects, because now everything is super speculative?
So again, for us, it's more on what the founders have done. I've invested in games where the founders are amazing. I'm looking at a game which has 100 million gamers on its Web2 platform, known as Gomble. I haven't invested, I'm just saying a name. So the thing is, we clearly know that next season is about adoption. And you have to have an adoption strategy. Building a great game doesn't mean that you will get adoption to it. So we at least need that the founder has some expertise in, say, Electronic Arts or some other gaming studio where he got a lot of users, or he had a Web2 play. So it becomes an easier investment. Because as you know, games are either a hit or a miss sometimes, unless it's not a gaming studio. So for us, we look at what are the credentials of the founder, or if they have anything on the Web2 side.
Yeah, for us, we have very expensive due diligence framework. So there are many things that need to do the list, but I think it's very important to actually differentiate like a good product from a good deal. So for us as a VC, we prefer to be, somewhere like before 50 million valuation, so at pre-seed C stage. So even if a product is exceptional, but it goes to the market at 1 billion valuation, is basically just not a fit for us, because we are not private equity company. We are VC, so we want to be early.
Yeah, and answering your question, I think that it really depends on the VC you're talking with. On our side, we're doing very small checks, right? Like from 100K to 500K, and valuation should be around 5 million in order to make sense for our equity stake. So that's something that it really forces us to join the company very, very early and have high conviction on that. Whenever who else is joining or not, this is not something that we're looking for. We're just looking for for excellent founding teams and high conviction on our side.
Nice. What a great question. Thank you, my friend. Great stuff, Javier. Yes, my friend, if you could introduce yourself to the room. Thank you.
Yeah, so my name is Apurva. I'm a researcher at Digital Social ID. Our team will be pitching in the startup final soon. So my question is to Vineet sir. Specifically, what do angel investors look, apart from the team, in the app when they are willing to invest large sums of money before Series A, like for pre-seed investments? What are those key aspects in the DApp that investors will be looking in 2024? Like as you mentioned, right now you guys were investing in the infra first, and then you're kind of willing to, when the next bull market starts, you're going to invest in the dApps. So what are those key aspects you guys are going to be looking for in those dApps?
So because you specifically asked on the angel side, that means early side. I think other than you having a relationship with the investor, nothing counts. What I mean by that is you randomly approaching me and telling me about your product. Trust me, 600 people are doing the same thing. I wouldn't remember. How do you build a relationship, meet an investor outside for a coffee, show him the track record of next 6 months, decides whether the angel invests? I was a founder, trust me, I learned it in my investment days, not in my founder days. I would just land up at a VC, pitch my product, and nothing would happen. Because true founders actually keep on following back, keep on showing traction, keep on showing what has happened. It may take 3 months, it may take 6 months, but once you have that big check-in, everyone else follows in. You don't have to look at segments, you have to look at what you are doing good. If you don't know how to make a game, there's no reason building a game, even if the market's about that. Build what you believe in, pitch what you believe in, and build up a relationship so that whether money comes today or tomorrow, it definitely comes on an early stage. Later stages is a different game.
Fantastic. Okay, and we have one more question here. What a great question, a great answer as well. Thank you. Could you introduce yourself to the room?
Yep. Hi, I'm Joe Rotundi. I'm a co-founder of Unit Network on a pair chain on Polkadot. So my question is, it seems like at this conference there's a lot of talk about tokenization. It seems like that's become the trend the last several years. But a lot of it's from the corporate perspective, sort of should we tokenize the things we already have as digital assets? And not so much, it seems to me, from the perspective of like what's coming up, projects that allow you to tokenize or tokenization. I mean, what are you seeing in terms of from your perspective in that trend? Is it a growth trend that you want to invest in, or just something that's happening that you don't have too much to do with?
Yeah, I think tokenization is very interesting, and specifically in the context of real-world assets. I think that's quite, rapidly growing subsector within DeFi, basically solving, problem of better access to capital. So we are big believers in tokenization, but I think the biggest obstacles as of today, as for all the crypto, is basically compliance and having, a clear legal framework that everyone can comply and operate within.
So real-world asset tokenization is supposedly one of the key segments that will come up next season. Because, imagine you have a house and the title deed can go online and 100 people can invest on blockchain and there's transparency. I've been looking at products. I've looked at 4k.com, which tokenizes things like Rolex watches. So this definitely is a use case where adoption can come. And crowdfunding has been there for a long time. Again, will it succeed or not? Only time will say. But I personally believe RWA and tokenization is definitely one of the things in the future.
Yeah, on our side, even though we are not Web3 specific investors, we've seen several projects that use tokenization. And I think it's a very, very interesting topic. At the same time, I think that we should keep in mind the fundamentals on the company. And it always should be linked to a business model, to a real business model. And it's something that may be developed in the following years. And it's something that we keep exploring. But yeah.
Fabulous stuff. And with that, my dear friends, I believe the clock is approaching zero. Amazing timing. My dear friends, please join me in thanking our power trio. Explain a lot about some big money and some big potential industries. That was absolutely wonderful. Thank you, Ivan, Vineet, and Anton.